Okay, hello everyone, and welcome to another Pepperstone live stream. This is the week that we've all been looking for as traders and investors. Of course, we've got volatility coming in straight into earnings season in the US. Google and Tesla moving big at the time of this recording. And today we're talking about everything from currencies to, of course, what's going on with gold and oil. There's a lot to talk about today, Tyrone. I'm excited to do it. But how have you been going this week? And what do you think of these markets at the moment?
Yeah, now going really well. I think welcome everyone. I think we've got some really good moves already, haven't we? We've seen some really good extended moves on some of the key indices, and the Aussie dollar started to crash a little bit today for us. Lots to talk about ahead of a big week.
Yeah, it's certainly going to just keep getting bigger as we go through some of the biggest technology stocks also into next week. This is the time that traders need to come out and get their key levels. So today we'll be talking about plenty of those. Just before we get started, guys, we've got a risk warning. And as always, if you have questions throughout today's live session, answer them or just ask them in the chat and we'll answer them throughout. And then, of course, if you want to keep watching these types of things, make sure to check out the description and the links down below so you can sign up. We do these every week, 8 p.m. Australian Eastern Standard Time. We'll see you in just a moment. Let's get into it. Okay, well, Ty, I think the best place for us to start today is, of course, to discuss what's going on in these major indices. More importantly, why we're starting to see this fall off in the NASDAQ from the first 2 weeks of July, that usually been the strongest 2 weeks of the year. In fact, the best 2 week stretch of any normal calendar year is the first 2 weeks of July. So definitely mark that down in the future to look for price action around there. But the second half of July, we start to sometimes see weakness. And of course, going into the election this year, it looks like the volatility has started to pick up before the new November elections. And it seems to be all happening now. There's a lot of news going around, and that's leading into this one, the VIX starting to increase. So I just want to start here and talk about it, because when the VIX goes up to 15, we pay attention. When the VIX goes over 20, that's a scalper and day trader's dream, isn't it?
Yeah, it is, most definitely. And I think, look, the actions are certainly about to start, I reckon. We're starting to see some really, really good moves look, the NAS is a good place to start, because I think it's testing what we talked about a little bit last week, in that there is a potential head and shoulders forming on it. And really it's testing the baseline and neckline of that now. And the VIX starting to move towards the, we're already starting to see a little bit of that move. It could cause this to fall through this base. And if it does, our projected target is somewhere around that sort of 18,200 to 300 level, that that the head and shoulders will actually form on that. So a VIX would certainly, a VIX volatility would certainly help increase the chances of that happening. But hey, that shoulder went up to the 20 moving average. The right shoulders are very, very narrow. Went up to the 20 moving average, as we would like it to do. And is testing the neckline right now. So boy, oh boy, I reckon we've got some very interesting days ahead, or maybe hours ahead for that matter. Because if that neckline fails to hold there, I think you could see an interesting move.
Yeah, so some stuff that I'll just pop on here, some charts. Basically, what this would move, if we get a move underneath this 19,500 level on NASDAQ to start off with, then that's probably going to bring in a fairly decent, what we call negative gamma situation, or basically weakness in the market, and it can cause markets to go to their next level. And I would think the next level is somewhere around that 18,570. The thing about head and shoulders, as you know, Ty, when they're in the direction of the overall trend, then they tend to do well. If they go in the direction of against the trend, then you tend to look for about 65 to 75% of the expected move. So if we expect it to go all the way down to the range of 18,200, then really somewhere around here actually might be where you want to be starting to take that profit off if you are in a short that period. Yep. So let's just quickly go back to the VIX before we look further at this. The volatility market is currently sitting around 15. Now, generally twice a year we get a pullback, Ty, and then we tend to see the markets go from around 15 up to 20 at those periods. So if we get two pullbacks, usually two 20s a year, and if you go back through your history of the VIX, that's pretty normal, I would say. So will we get it again right now? I think it all comes down to this level and whether another earnings kicks off a sell underneath this important zone. Do you think we'll get a 20 this time around, Ty, or is this just a bit of a taster for maybe later on this year?
I think we're a good chance of getting a 20. Personally, I think that we're a reasonable chance. The election race has been thrown into a little bit of a curveball situation where we have got a change in leadership, and I think anything that can cause the market to slightly let's call it destable. The market's looking for an excuse to actually have that bit of action. And mind you, let's look at this weekly NAS. The other thing that we've got to consider, apart from the head and shoulders on the daily, that weekly is actually also showing an evening star pattern, which is extraordinarily rare on a daily chart, right? Like, when we highlight that, we're looking at a very big evening star pattern on that NASDAQ. And even that pattern forming also coincides with an 18,300 move if it fulfills its destiny. So two really big patterns that are actually different in their context over two extraordinarily important timeframes. Here we are calling the death of the NAS, Tom. I'm not saying it's going to completely sell off, but
No.
when patterns are telling us that, we certainly have to keep a very, very close eye on this current level.
Yeah, so I actually did some analysis on this, Tyrone, around the key supply zones. I think this is what's really important. At the moment, on the smaller timeframes, we're still making a series of lower lows and lower highs. Now, obviously, we made a higher high here versus this point, but we didn't manage to crack this area I labeled the bear bust area. And the reason why I labeled that was because, as it turns out, if you look at a lot of the trade volume, was actually trading around 19,900. And on the S&P 500, that lined up to around 5585. So 5585 was one of the most important levels of the last 24 hours. Then, since then, we've actually seen a high and a low and a higher high and then a lower low form. And this is now telling you that on all of the smaller time frames, the bears are in control of this current market. Now, a lot of people are going to say, well, what if this is a double bottom? What if this is the support that holds? You might see that, but at the moment, you're kind of predicting. And as we often say, it's better to have patience here and to look for the market to actually tell you that it's done a trap. And Ty and I are big on trap trading in these markets. It's something we talk a lot about, which is basically where we look for the market to show us a reaction around key zones. And there's no doubt that 19,500 is a key zone for the NASDAQ. And if we end up seeing, let's say, like this, and it goes like that, then that's going to give you a lot of nice bull run potential in the future. If it fails here, though, and goes down, and as it pulls back, you should be able to get a better style short as well with good risk reward. So it's all about picking your fights. And I guess that takes us to the S&P, Ty. As I said and mentioned, there was a fairly big bear bust zone, which sat around here at the 5585, and it actually hit that perfectly. So This was exactly where all of the options were sitting. It's exactly the beginning of that supply turning into a kind of resistance zone. And of course, we see something similar. So what I expect today is actually something like this. That's my current thought process. A lot of gaps from the earnings after hours, Google and Tesla both falling off. Maybe we get a buy rally. And then if the bears are going to come in, somewhere around 55, 60 would be where I think they're coming. What are your thoughts on that strategy or thought process of the technicals at the moment, Ty?
Yeah, I think the the S&P is a very, very it's at a pretty heavily guarded zone. I agree with you. I think the it looks like it's under fire to me, and similar to the NASDAQ. I think that if we do get that break, the potential for a move down to that sort of 54, 50-ish area. Is pretty strong. I do like that level. I'm not gonna lie. I think it is a critical level. Look, the 20 moving average is sort of still sitting quite a bit below that. Like, it is fairly removed from the 20 moving average right now on the daily chart. So while we're trading so far away from it, we're looking for little parking spots down to get there. I think it looks weak. I think you'd be brave longing it right now. I think probably the trades are probably the scalping moves down slightly lower, and then maybe we look for those reversals. I think it's certainly a time to be looking for these scalping opportunities off key levels, and definitely that sort of 54.50 to 54.70 zone is a very important one. I do like it.
Yeah, I love the 54.50, 54.70 zone. Because this zone is so important for the bulls to hold. They fail here, that's going to pretty much bring in line, I think, your NASDAQ head and shoulders, Ty. So for the first time in a while, it's not just US 500 giving us some great reads. It's also the NASDAQ giving us some extra levels. So a lot of stuff going on here in the markets. If we do manage to fall below 54.40, I think the next stop for me is the most traded level. Big important anchored VWAP around here as well, Ty. 5,300 for me all day after that. Why? Because when I look at it on the charts, we've got weekly 20 moving average, and we've also got a bunch of key indicators around there. Plus, it was one of the more traded zones on the way up. So I think if we fail this level here, then this will become the next zone, and 5,300 should theoretically equal some very nice head and shoulders style move on the NASDAQ. So a lot of people are looking for this one because usually every year, as I said, we get 2 pullbacks. We get 2 times the VIX goes to over 20. And if it is going to happen, it has tended to happen earlier when it comes to the elections since 2020. So we know that that's the kind of scale that's been going. We've got Grace, Scott, John, Aussie Cover, Michelle, Dealies, and many, many other people coming in. Thank you very much for giving a thumbs up if you enjoy this type of content. And of course, having a chat in the rooms, and many, many other people, of course, watching this in the recording. We do read your comments each week. So thanks for that. I just want to make sure, Ty, that people are able to see these screens at the moment. Hopefully they're coming through okay. Not sure if there's a technical difficulty, but on my end, it looks all right. But I just did see a comment then in the chat. So weekly 20 moving average, something to also watch on the S&P. Ty, other than these major indices, though, you've got another one that we've been looking at a few times. Did you want to walk us through that? What are your thoughts on, or what is it, and why are you looking at it?
Yeah, sure. Look, the UK 100 is of great interest to me right now, and I've been watching it for quite a while, talking about it in the morning streams, mainly because it's testing a level that is very, very important. If we can just pop it up on the screen on a daily chart. I'll just talk you through it. We've got a horizontal. I think we've got. Do we have you there, Tom?
Yeah. Yep.
Great. Okay. Yeah. Sorry, I lost you there for a second. The chart hasn't caught up. We're still on the I'm still seeing the S&P 500 chart.
Oh, definitely.
Here we go.
So,
got you. Okay, there it is now. So, look, we can see this baseline here, even this yellow line. You can see that sort of 81.13. If that line, that's touching the bottoms of all the wicks, but there's very, very heavy support at around that, effectively that 81.50 really, where a lot of the bodies are actually lining up. Now, that this level has been getting tested several times over, and as you can see, each high is getting lower and lower. You can see that the every time it rallies off this base, the highs are getting a little bit lower, even though we have got a bit of a top of that channel. Each high is getting a little bit lower each time. So this base is being peppered. And I think that if we do get a break of that 81.50, it's almost free fall zone to around that sort of 8,000 level, which is a very important zone for the UK 100. So to me, I think a daily close below the basically 81.40 would be quite a potential for an 8,000 move. So it's only 140 points from there, but I think there's pretty good potential for it. We're about to get a 20/50 moving average cross as well on the daily. So boding well for a break below that level.
And at the moment, it's certainly doing a thought process of a bounce, but of course, this can change by the close. So I think that's very important. Whenever you're looking at these markets, you want to be making sure that we watch for the close and not what it looks like during the session. Because if right now, if you look at this, you think, wow, look at that bounce. It looks like a hammer candle or a pin bar. And that makes you think, oh, got time to buy. Look how good it is. Sometimes it might be, but that's a guesswork. Until it's closed, it's not locked in history. And I think that's one of the things we first learned when we went to Trading Tire. I often looked and I thought, oh, that candle looks amazing. And then just before, let's say, the London Open in Currency or New York Open or any of these things, it changed about 2 minutes before. And then all of a sudden, it didn't look so nice. So you've always got to wait until the close. The close is the key, as we've mentioned several times on this show. So Absolutely. UK 100 underneath 8.1 equals possible of 8,000. Another good level to be watching. And this is one we brought up also last week. All right, well, from indices, let's move over to some of the currencies. And we'll start off here with gold, actually a commodity. And gold has been doing very nicely, a pretty bad weekly close. So we'll move on to the weekly here first. And we'll just quickly talk about the weekly close because it is quite a negative candle. It looks like a shooting star. And effectively, this is not what a gold bull wants to see. We had what we call CTAs, which are commodity trade advisors. They were dumping positions around here. Now, that doesn't mean it's going to continue to weaken, but they were selling off. And then we also saw, of course, what many people are considering the beginnings of a Wyckoff distribution. Now, I'm not won over by that. I think this could be a trap to try to make it feel like gold is really weak. That looks horrible, doesn't it, Ty, when you first see it? But then you put it in consideration. Are we above the weekly 20? Yes. Therefore, we're still in a bullish trend.
Yep.
When we go and check the daily in a moment, we're going to see that we're still holding the daily 20 moving average. There's also an anchored VWAP that sits on this level exactly. And if we actually look at smaller time frames, which we should be doing as well, you'll see here that it snapped that downward trend, making a higher high, effectively saying, you know what? Yeah, the market's negative, but all of a sudden it looks like the gold has found some form of buying pressure. So I don't mind gold here. This is actually one of my kind of key levels for day trading. I'd like to see gold find continued buy pressure. And if a pullback does happen, let's say the 2400s or 2380s tie, I'd like to see it bounce off that zone and continue to strengthen.
Yeah, look, I think for mine, I like that it's sitting on the 20 moving average. It's testing. That's my marker. We all know that. Once it did that, it's trying to rally off that point. So I do like it. At this stage, I think you'd be very brave to be shorting it.
Yeah, I don't want to short. I don't think I'd be wanting to short gold here. And another one is, of course, silver. And a lot of people have been talking about whether silver is going to play catch up to gold. We've looked at the version before. It's on a precarious position because it's come down, but I actually noticed it tweeted yesterday. So such an important point for silver. When you initially see this chart, Ty, coming off the key support or demand zone, do you think, considering this is role reversal, is it going to be strong enough to hold this time? I mean, it came down like a freight train. Is the tweezer enough?
Yeah, look, I think a little bit of that is going to have to do with what gold does. If gold continues to hold here and strengthen, I think that should be enough support for it. Yeah, look, it's a very key zone. We've talked about this level many, many times over the last few weeks, Tom, and I do like it. I think it'll hold, personally, but a daily close below it, and we're really opening ourselves up to a nice move, I think. But we would want it to hold. This level must hold.
That would be ultra negative. Next stop, possibly even 27s.
Yeah, absolutely. I think that's probably the zone.
Yeah, it'd be pretty bad. And that's the way you have to think about it. Right now, you might be a little bit bullish because it's a key level. But as Ty said, that's a tweezer. That's a key support. If that gets taken out, next level of equilibrium, a lot lower for silver. So it will be quite negative indeed for one of the precious metals out there. US dollar, Ty, a few people mentioning here in the chat, Euro USD as something they're looking at. Now, we've spoken about the US dollar. We wanted to see a closure underneath this little level here. And we actually got that on the daily, though the weekly didn't do the same thing. And then it bounced up where effectively now it's trading just below the daily 20 moving average. I've kind of thought, I did a couple of different fibs here, and I'll just pop the fibs on because I was playing with some fibs today. And the first fib is, of course, a really deep pullback or a 38.2, which is where it is right now. And then if you fib the second move, this would be a 61.8. So that's what we call a fib overlay. So we've got a fib overlay sitting on the same level at around 104.30 to 104.40. Do you think that'll be enough, though, to hold US dollar back and actually force it down? My thought is underneath 103.90 is the key because we've got coiling market, high, obviously testing in here, might bounce a little bit higher. But if it does go underneath this level, I feel like that brings the bears and continues the weakness.
Yeah, I think it's had a reasonable rally, and it needed to. Because that was an extraordinarily important level, but it got down there a little bit too fast. So I'm not surprised that we've been able to get above that level again. I think it's got headwinds right in front of it. I agree. I mean, that sort of 104, sort of 40 to 50 area, 20 moving average, previous support and resistance, and also the middle of the channel that we know is there. I am concerned about the strength of it, but if it is trading above that sort of 104.60 area of a daily close, I'm going to start to give it a bit more, I guess, comfort in the fact that it might get back to the 105, but I'm kind of expecting it to roll over.
Yeah, so it does have this inverse head and shoulders that a lot of people will be able to draw. Do you actually think, though, that I actually don't even feel it's good until that level's broken through? So for me, yes, I understand the pattern's there, but I'm not won over by the pattern until it gets above 104.87, and that means it's probably an untradeable pattern for me.
Yeah, because the problem with this pattern is it's against a very, very heavy trend. And that always worries me. Like we don't really like trying to pick bottoms in markets. And for me, if it found a little bit more support here and then did an inverse head and shoulders, I'd be a little bit more comfortable than a very sharp drop and then make an inverse head and shoulders on such a small time frame. So it's one of those ones where you definitely trade it with caution.
Yes, I think we'll have to trade this with caution. Now, the question came in was euro US dollar. That's coming into a 38.2 retracement. So basically, looking at this entire move, I'm pretty sure this is the question coming in from a member of the chat, and it is from Dealies86. It says, "Hello guys, nice 38.2 retracement on euro USD." So basically, liking the fact that it's pulled back to a 38.2, which is exactly where it is, to a daily 20 moving average, to this previous level. So you can see here there's been a little bit of congestion there. And as we go down through timeframes, 2 hour, 1 hour, 15 minutes, all those timeframes, these are the timeframes that we always see be key. So it's all about structure. Has this market kind of shown itself to have a head and shoulders? Sure. But if you actually projected that out, what you'll find is that we haven't moved it exactly. So this is actually ahead of the dollar index in some ways. That would present into here, which means that we're in a very interesting zone here for bulls to pick up euro and start continuing with that. And of course, if that happens, that means that there's weakness in the US dollar.
Yeah.
So pivotal point, I like the zone. I just don't see enough of a bull buy yet from the euro.
Yeah, no, exactly. I think it's very, this level is very interesting. I'm going to probably let it just play out for now. And then we jump on board the direction it goes to. I'm not really inclined to be trying to pick a direction just yet, because I think it can swing both ways very, very easily and quickly.
Yeah, if we keep going down time frames, you could make an argument to get above 108.57 because we have seen a little bit of structure as it pushed into this low. So some people will be looking for a breach of this zone and then taking it into somewhere around that line I've got here, which is 108.85. Look, good level, certainly a range that I would be generally looking at. But I feel like there could be still a little bit more left in the tank for the dollar and then a bit more weakness in the euro first. So I am looking for more structure if it can be helped, because there will be a good swing trade, of course, if the market can get above 109. If it gets above 109, it's back on the bull trend. You've seen that 38 retracement. Things start to really improve there. So that would be quite nice. All right. We'll move over to the next one, US oil. Always a hotly requested piece, and it was very negative last week. It fell through. So last time we spoke, we were around here, which was before, of course, the big fall off on. Actually, we were pretty much in this zone here, I think, on Wednesday, 17th. So we were talking about this actually looking kind of bullish, and at the point, I did think so. We held this level. We found a little bit of bull bias, and then we had that horror day which came through here. Now, as soon as that happened, it was over for basically oil. Oil broke underneath this level. That's the end of that trade. It takes out all the wicks here, and this is how fast markets can move. As soon as that happened, as we theorized last week, we would short directly into around 78 a barrel. So we went pretty much directly down all the way into 78 a barrel. Happened really quickly. It was a very tough scalp. Well, it's not a tough scalp because it just kept going down, but there wasn't a great risk reward there. But yeah, oil barrels failed up here. And as soon as that failed, the rejection happened. Now, this is an interesting point because this is where I would expect oil to hold up a little bit better. You can put a fib here on the charts. And again, if you get this fib on charts, you'll notice that we have a very key turning point at around this zone. Ty, your thoughts on this level?
Yeah, I think it's look, it went crashing through, didn't it? It was very, very interesting how fast it actually did drop. I think a lot of people welcome a lower oil price, but you had to be literally there to capture that touch of that 78 zone, right? Like, it happened so fast. It did go and pull up very, very quickly. I think that level kind of needs to hold. The head and shoulders that we were talking about on this, I think it was last week or the week before, that it was potentially setting up. Remember, we were doing that chess play on it, basically hit its target. So if you did actually take that trade and had to take profit there, you would have got out. And probably it highlights the reasons why we always actually set a take profit, Tom, isn't it? Rather than just let the market do its thing, because quite frankly, you could wake up in the morning, you could see that it actually hit your zone and then rebounded back. It's not to say that it's all over. I mean, it could continue to short, but we are potentially at a very strong support level. So I think it's important.
Sharing the screen to see whether this will fix it for us. So so we're looking for, this was the head and shoulders we're talking about, big right shoulder highs, and then theorizing that it could come down. But what I like right now is a bull buy above 79.16. I'm probably off the short wagon as we hit the 61.8 retracement. So really, if you're shorting, my profit usually would have been right in there, about 78 a barrel. And at this point, I'm looking for a bull buy. So this is one I've got on my charts. I've got alerts for it. And of course, I'm looking for it this week. But just because you're looking doesn't mean there's edge. So we're always looking for, when do we find edge? Where are we going to find that edge? All right, let's go to the next slide, Ty, here in terms of the charts. And the one that we've been talking about a little bit recently has been Tesla. And I thought we should mention it because, of course, it came out with earnings over the last 24 hours, missed on quite a few things, had some once-offs, and the market didn't like what it heard. And it was expected to be a move of around plus minus 9%. Now, it ended up being negative 7.6 here. So the options market got it pretty correct. And it sold 2 coming into the end of the day. So really, if you add 2 plus 7, I guess you get 9. So the market was actually correct there on what it was thinking. Now, if it holds underneath the 233 today, this brings in a options negative flow, and it closes underneath the daily moving average. It's been a strong trend. You've got to think gap fills would be the next stop for it. And I've kind of thought about this, and I feel like the level that it might stop at is anywhere between 200 and 208 or 207. So, yeah, I feel like this is a negative. Obviously, it's initially a negative result. That doesn't mean the upward trend's over. But if you do fibs, if you think about it, if the market holds underneath, it should move to the next level of equilibrium. And it looks like that next level of equilibrium is around $200.
Yeah. I think the only thing that scares me about Tesla is the X platform.
I love X.
I know, I love X too, but the problem is, all it's going to require is, do we still call it a tweet, or is it or is it an X?
Yeah, it's still a tweet. I don't understand that.
Is it still a tweet, or is it an X? I don't know. I don't know.
No, well, no one knows.
Yeah, but if it's a single tweet could move this 10%, right? We know that. So I think you got to be a little bit mindful of that. Our man Elon can put a positive spin on almost anything. So I'm always very, very cautious of a bad earnings result on his baby. So just probably be a little bit careful, I think. But I agree. I think that zone between that 200 and 210 really is a very possible scenario, very possibly strong scenario there. In fact, I like it.
Yeah, so I don't mind the zone. It's not quite a 61.8 of the whole move. That's what I put up there, but it is a 61.8 of, and obviously golden fib of the most recent move. A lot of gap fills, a lot of those types of things. I mean, people are obviously worried about Elon getting a little bit too thin in terms of the amount of things he's doing on every other platform, and that's starting to leak through to Tesla again. But it's been a strong trend. We hit the first major TP, big key level, And yeah, from there, where we are right now. And I do realize there's a little bit of drops here, but don't worry, guys. We will be moving to a slightly different platform in the future as well for these, so it won't be as kind of laggy through these. All right, we've got some questions coming in from a few pairs. Grace says here, silver was bouncing from 29.40, and I thought mid 29 zone could provide temporary support before 28.50. Was there any early technical sign indicating it was heading towards the key support of 28.50? So if you look at ZAG XAG USD and you load up this type of chart, yeah, I don't think 29 was ever going to hold anything. If you really look at your dailies and your weeklies, it's very important to look at those zones. When it starts dropping and it goes through the key area we spoke about last week, the most logical conclusion is to move towards this level here. I know why you might have 29.50, but there's nothing on a higher time frame. And ultimately, this is position-based trading. There's nothing on a higher time frame that says that that's a really key zone. So effectively, when markets give up their most important levels, like it did here, that brings you to the next zone. The next zone is logically here. So unfortunately, buying anywhere in between that area is buying something that is less strength, and you've got to remember it was coming down with quite significant force as well. So that can be a bit painful. But good question. That's the way we generally look through here. Alham, says, how do you trade nat gas? Is there more upside? Look, I'll just use the natural gas main proxy here so you can see it. We'll just use, I don't really like natural gas as a trade. So nat gas is a little bit of a problem to me. And the main reason is because it is a futures contract that generally is put into spot. And the way it works is that it's called the Widowmaker. And the reason why is because it can move very heavily in percentages, and it can really cause you grief if you get it on the wrong side. The upward tick of around here, which happened in April, I think was a very good trade. If you were looking for a long time for a base, that was a good go signal. The movement up to these levels, probably fair as well. If you actually have a look at it on a daily, I think the most fair levels were around here at around 286 and 255. But where it is right now, I don't really have anything to say about this one. Ty, do you like anything on nat gas at this point?
No.
That's it?
Yeah. I don't like it. I don't like it. It's not one that I enjoy trading. And no.
Unfortunately,
I just think there's too many variables. Yeah.
Yes. A lot of futures contracting actually goes into the spot, and you've got to be careful. You've got to be really sure about your system. So just thinking, it's cheap. Unfortunately, it's cheap doesn't necessarily work with nat gas. And I'd encourage you to have a look at a weekly time frame and really break down over the last 2 years. And even during inflation, it looked cheap, and it still kept dropping and dropping and dropping. So, you got to be really careful with nat gas. Next question here, Ty, coming in. It says, what are your thoughts on pound US dollar? So pound breaking to a new upside last week. Actually, here, we spoke about this, I believe. And it broke through 2 weeks ago. It broke through. Then it's come back down to around this roll reversal. It's not quite low enough yet. But do we like this one, Ty? I mean, it's got the inverse head and shoulders in the direction of the overall prevailing trend, which is here. So there's the inverse head and shoulders. This is an excellent weekly close about, a week ago, 2 weeks ago. That's an excellent one. It does suggest the pullback should be met by bull demand. If this is anything to go off, if the dollar, it basically is telling us that, yes, dollar is weak and pound is really strengthening. But what I'll do is I'll proof it. So we'll take the distance, which is from the head to the neckline. I'm going to extrapolate that out. And what we'll get is around 13385. Now, I don't know if that's anything in particular. You would definitely say that's supply. But what do you feel about this trade, Ty? I actually really like those 2 weekly candles, but is it there right now?
It's not there right now, but by golly, it's getting close. I mean, it looks very, very strong on a daily, right? Like when you look at the big swings, it looks very, very strong. I would have liked it to pull back just a little bit more from a selfish standpoint. I would have liked it to get back all the way to sort of 128.20. I think that would have been a really, really nice pickup zone. It's not to say that it won't, but that would be the ideal pickup zone for me. But it's that testament to how strong it is why it hasn't got there, right? And I think that I think the proofing is there. I do like this for about 131 in the first instance. I think the first big move is about 131. The previous high, the recent high, is a very strong level, and I think that that pullback. I mean, it's a decent fib pullback as well, and it's strong. And I know that this is going to speak more about the dollar index, and it's going to speak about the pound's obviously strong. I think 131 is probably the level for me.
Yeah, I feel like upon smaller structure, we're looking at about 129.50 or 45, let's say, breakout. From there, you're looking a lot more bullish. You'll notice here, even on the 2 hour, although this is not really the best 20 moving average, even then it's kept it down a bit. It's got a series of lower lows and lower highs for now, but we break that sequence coming off this level, considering the dollar index. If it's also doing what we spoke about before, which is breaching underneath that zone, I think all the currency pairs are going to kind of move in uniformity. And to a degree, I look realistically, the pound showing itself to be the stronger of these major currencies in the current events that are going on around the world. All right, well, Ty, from the currencies world, we go into a few other things such as crypto. We also would like to encourage people in the chat, if you've got a question about a particular pair on the Pepperstone platform with TradingView or anything else, let us know, and we'll have a look at it very, very soon. We've got one coming in here from yen pairs, and whether we see more upside. Certainly a risky pair there with Bank of Japan always intervening. And if you have some other ones as well, put them in. All right, let's have a look at Bitcoin. I've really enjoyed this. I thought it was an excellent move on it. We spoke about it last week, and we spoke about the week before that as well. Actually, this was a phenomenal move. And as we mentioned in several of our sessions, once we got through this level here, this 20 moving average down plus the closure break, it kind of gave us that idea that we'd be climbing the wall of worry. People turning really negative on currencies here. They're getting squeezed, in my opinion. And at the moment, it's making a series of higher highs and higher lows. That sequence may be broken. We could still go down this far with finding a buyer. But for me, Ty, when I look at this on a weekly and even these timeframes, it still looks quite bullish.
Yeah, look, it's doing all the things. I mean, forgetting about the symbol, it's doing all the things from a technical standpoint that says the strength is there, doesn't it? And I think the previous highs are probably in serious danger. Well, this may be the one that breaks through.
Yeah, I feel like it is when you put it in this perspective. Weekly, we have, of course, what a lot of people were calling the McDonald's pattern, Tie, which is because you have to go back and work at McDonald's, unfortunately, because crypto has done bad things to you. And it's basically double top. So we've got the top here, we've got the top here equally, and then we break through. Now, that gave a lot of people an incentive to short. As I always say, was the trend coming into this negative? And the answer is not really. It was quite a bullish trend. So even though that broke through, the best case scenarios for a bear were probably these two zones. And then we saw that change, and that gets that wall of worry going up. All bears could still be sitting here, but this may be the one that breaks it. And for big bulls, you're going to be looking at weekly closes above 71.7. That kind of level closes could bring in the momentum back into these pairs. All right, let's move here to Frasato says Bitcoin's a liquidity hunter. Everything you'll find is pretty much a liquidity hunter. But yes, I agree with you. There are, fortunately or unfortunately, some very unsophisticated investors sometimes in Bitcoin, and it can lead to them making terrible mistakes, and hopefully not you guys. And therefore, that could be something you can look at on the charts. All right, US dollar yen. Is there more upside? 160 reached only a few weeks ago. It's fallen since there, Ty. I'm not a yen trader at the moment. I haven't really traded yen too much in quite a few years since the policies got a little bit dangerous for my liking. Of course, most people have been going long US dollar against the yen. We are coming back to a key level. It's falling pretty quickly. Do you think it can save itself here?
Oh, yeah, look, it hit the level that I kind of expected that it would. I've had that level marked, and we've been talking about it for a while.
160.
Yeah, I mean, it definitely hit it. Look, it would want to stop right now. It would want to stop like right now. Or I think 152 will be the next target. And I think you can get there fairly quickly too. This was a solid zone.
Demand, by the way.
Sorry.
Very good demand at 152.
Yeah. I think 152. It's got a lot of reasons to get there. And we are very close to getting a 2050 cross as well. Looking very, very bearish. And I think 152 also proofs the move for the swing. We love swings that are equal. And this second swing would finish at 152 if it was to equal the previous swing. So it'd want to hold here. It's probably it'd want to hold, because if it doesn't, I think I'd be starting to look for 152 as a target.
Geez, I'd almost just say 152, see how it reacts to it. That is actually a pretty good hidden demand level. Good trade off there. And I know there was a little trade in the zone there. It just looks so weak. It's taken here so far. It could turn. If it does turn back up above 158, 158.50, maybe it's going to keep getting legs. But yeah, look, considering the pair, considering the risks that are involved in it, you really need to be sure of your overall plan. So I would say if you look at the weekly, it hasn't really shown any signs of turn yet. It tried to reject off the 20, and right now, as we speak this week, it's already much more negative. And considering we're thinking maybe the US dollar is weakening on the charts, Ty, overall, this could feed into maybe a bit more of a sell-off. When it gets really wild, you can see what happens back in 22, back at 23, November.
Oh, yeah.
And then, these aren't small moves. They're quite large.
Yep. No, it can certainly, when it gets cracking, it can certainly get cracking.
Alison, just thank you very much. No worries. Thank you for coming into the chat and spending your time here on a Wednesday with us. So things to look forward to. We'll go through Google here just to kind of finish off the big earnings. So, of course, Google coming out with their earnings as well, leading into a 3.22%. I think the earnings were pretty much as per expectation. But again, if you have a really good company and it's going ballistic, like Google is, you will need eventually to get what we call mean reversion. So one of the best things in the US stock market and US stocks, if you trade them on the Pepperstone platform, is to always look at that weekly 20 moving average. So the weekly 20 moving average is a solid level for a lot of individual stocks, big quality ones, and often a point where you find markets will pull back to. It's called mean reversion for a reason. But yes, Alham, sorry. As always, hopefully you're getting some educational content out of this and finding something new that maybe you didn't know just a few hours ago. So weekly 20 would be my thought process here for Google. Ty, it's down 3.33, and that needs to lose a point where I think a bidder might really come into it.
Nice target.
Looking for action around that zone.
Yep, no, totally agree. I think that's the place.
All right. Well, as always, guys, we want to say a big thank you for coming out. There's some great big announcements coming as well from what we do here with Pepperstone to make the platform even better for you guys. So make sure to sign up in the links in the description down below if you want to follow along on what moving forward over the next couple of months. And also for anyone that's in the Sydney or Melbourne area, stay tuned as well, because we will be having some live events, which I believe we'll kind of be putting on ourselves. It'd be great to see you at them, and obviously to hang out with you guys, to go through some amazing content we've got planned, some really extraordinary stuff that we'll be sharing, and we'll be doing that over the months of, I think, September into November, won't we, Ty? So it'll be great for anyone that's in Melbourne or can make it over, and Sydney to come check us out. And Alham has a great comment here, Ty. 1% better every day. Absolutely. That's what you've got to do. We keep learning. You guys keep learning. Everyone. If you ever stop learning, usually that's a very bad sign. You're becoming complacent. Thanks very much, says Grace. No worries, Aussie. And Aussie says, what about Adelaide? Maybe in the future we'll do Adelaide, but for now, Melbourne and Sydney are our two first targets to obviously, hopefully meet so many of you out there. All right, Ty. Well, I guess that brings us to the end of the show. Do you have any words of wisdom for anyone this week?
No, just be mindful of the trading environment that we're in. It's going to be volatile, so really look after your stop loss and take profit levels and keep them relatively tight, I think, for the next wave of volatility that I think we're going to see.
Yeah, make sure to get an earnings calendar for next week. Know when those big tech stocks are coming out.
Yeah.
That actually seems to be the most volatile event at the moment. Core PCE coming out on Friday before the market open as well. That's something the Federal Reserve uses to figure out whether inflation is dropping or not. So that probably not as much volatility there, but a scalper will want to know. I think day traders, swing and investors, and even scalpers, you guys will need to be on top of these big tech stocks next week. All right, guys, from all of us here at Pepperstone, thank you so much for watching. We'll see you next week. Bye for now.
Thanks, everyone.